The world's most powerful financial giants, Mastercard, has officially named XRP as a bridge currency in its latest report, and this isn't coming from some obscure blog or third-party commentator. This is coming directly from the inner sanctum of global payments infrastructure, from the very same institution that processes trillions of dollars annually, connects over 150 currencies worldwide, and sits at the nexus of banking, fintech, and institutional finance. Mastercard isn't guessing. They aren't gambling. They know what's coming, and their recognition of XRP as a bridge currency is not just validation. It's a signal to the world that the next phase of the global financial system is already being built, and that XRP is one of its central pillars. Let's break this down. In their recent strategic white paper and payment modernization roadmap, Mastercard didn't just name blockchain as a transformative force. They called out specific networks and assets that they believe will facilitate real-time, cross-border value exchange at scale. And standing shoulder to shoulder with SWIFT GPI and CBDCs, they explicitly named XRP. This is more than name-dropping. This is admission. This is confirmation. This is the equivalent of Visa in the early 2000s, acknowledging PayPal as the future of digital commerce. This is a tectonic shift. Because Mastercard isn't just reacting to crypto trends, they're actively shaping them. Their global network includes over 25,000 financial institutions, and their integration models are built for compliance, scalability, and long-term security. So when they point to XRP as the asset designed to bridge the fragmentation between fiat currencies, digital assets, and central bank digital currencies, they are not doing so lightly. They are signaling to their partners, their regulators, and the market that XRP is not a maybe, it is a must-have. And the timing couldn't be more critical. With over 114 countries now exploring CBDCs and cross-border settlements being hamstrung by legacy delays, fees, and opacity, Mastercard's report outlines the urgent need for an asset that can settle value instantly, regardless of the underlying asset class or jurisdiction. And XRP is engineered to do exactly that. Built into the XRP ledger is native DX functionality, a deterministic consensus protocol, and a deflationary burn mechanism that makes every transaction slightly reduce the overall supply. It's a bridge asset with finality in seconds, negligible costs, and neutral compliance infrastructure. And that's why Mastercard's engineers, analysts, and strategic partners are flagging it as the logical bridge currency between tokenized economies. But it goes deeper. According to insiders close to Ripple's enterprise partnerships, Mastercard's acknowledgement of XRP didn't come overnight. It came after months, if not years, of data, integration tests, and collaborative discussions with central banks, liquidity hubs, and regulatory bodies. And now, with RippleNet expanding to over 70 countries and Ripple's ODL corridors moving billions in liquidity, XRP is not only functional at scale, it's battle-tested. Mastercard's move may trigger a domino effect. Already, we're seeing large banks reevaluating their exposure to on-demand liquidity models. From Santander and SBI Holdings to banks in the UAE, Singapore, and Brazil, institutions are aligning with XRPL not just for speed, but for survivability in a world where CBDCs, stablecoins, and real-time gross settlement are no longer luxuries. They are necessities. But here's where the math gets wild. If XRP becomes the default bridge for just 10% of Mastercard's global transaction volume, we're looking at over $800 billion annually flowing through the XRP ledger. Now scale that across their partners and extrapolate across international settlement models and tokenized assets. Suddenly, the idea of XRP reaching $1,000 or even $10,000 no longer seems outlandish. It becomes inevitable, especially when demand meets finite supply. Remember, only 100 billion XRP will ever exist. A large portion is locked in escrow, and institutional wallets are vacuuming supply from public exchanges. Recent on-chain analysis from Whale Alert has shown multi-million-dollar XRP transfers going into cold storage, private custodial vaults, and direct OTC transactions. Meanwhile, Ripple's development arm is quietly working with governments and enterprises on tokenized ID, carbon credits, commodities, and real estate, all deployable on XRPL. Mastercard's statement is the exclamation mark at the end of a sentence that's been written for over a decade. XRP was designed for this. David Schwartz, Ripple's CTO, has said repeatedly that XRP's architecture was always meant to bridge value. Fiat to fiat, fiat to crypto, and eventually, data to money in a fully tokenized internet of value. And now we have global financial leaders echoing that vision. Mastercard has drawn a line in the sand. They've moved XRP from the realm of speculation to the realm of strategic planning. They know what's coming, a future where speed, compliance, and interoperability are non-negotiable. And in that future, XRP isn't just present, it's foundational. As the world moves toward tokenized treasuries, machine-to-machine payments, and decentralized identity, XRP is perfectly positioned to be the protocol-level glue that binds it all. This isn't hype. This is happening. And if Mastercard knows it, you should too. Bloomberg's latest report has just sent shockwaves across the global financial markets. XRP is set to take center stage. Not in some speculative future, not in theory, but now. And it's not just another crypto headline. It's being presented by none other than CME Group, the world's largest financial derivatives exchange, the institutional titan that handles over $1 quadrillion in annual trading volume. This isn't a drill. This isn't hype. This is Wall Street's infrastructure layer declaring XRP the future of finance. Bloomberg, the cornerstone of financial journalism, the platform institutional traders rely on, has validated what XRP holders and blockchain insiders have known for years, that XRP isn't just a cryptocurrency, it's a global liquidity solution, a next-generation financial protocol, and now, with CME's formal spotlight, it's being positioned as a central pillar in the evolving architecture of international settlement, cross-border transactions, and tokenized finance. Let's step back and unpack the sheer magnitude of this moment. CME Group doesn't just present anything. When CME puts its name behind a financial asset, it's typically a signal of institutional readiness, regulatory alignment, and systemic integration. They brought us regulated Bitcoin and Ethereum futures. They anchor the global commodities and interest rate derivatives markets. And now, they are shining their institutional spotlight on XRP. The CME Group's cosign isn't just a nod of approval. It's a doorway to trillion-dollar liquidity. It means that the infrastructure is now being laid for institutional XRP. Products, futures, options, structured notes, ETFs, and more, all with regulatory-grade visibility and Bloomberg terminal integration. And let's talk about Bloomberg for a moment. This isn't Twitter. This isn't Reddit. This is where $100 trillion in capital gets its information. Bloomberg is the source asset managers, banks, hedge funds, family offices, sovereign wealth funds, and even central banks rely on to make billion-dollar decisions. When Bloomberg publishes that XRP is set to take center stage, it changes the entire tone of the conversation. It moves XRP from the world of speculation into the world of macro strategy. Fund managers who once ignored XRP are now being forced to revisit it. Risk desks are being told to update their exposure models. Global custodians are preparing for inflows. This is what happens when legacy finance accepts a digital asset as infrastructure. So why XRP? Why now? Because in a fragmented financial world choking on delays, fees, and siloed systems, XRP solves problems at scale. Ripple has been building RippleNet and ODL, now known as Liquidity Hub, across over 70 countries, linking central banks, private banks, and corporations with instant settlement capabilities. XRP offers finality in 3 to 5 seconds, fractions of a cent in fees, and compliance features like escrow, KYC hooks, and tokenized compliance models that are miles ahead of what Ethereum, Bitcoin, or Solana offer. More than that, XRP now has clarity. The 2023 ruling by Judge Torres legally separated XRP from being classified as a security in its digital asset form. That's why CME and Bloomberg feel confident placing their weight behind it. It's not just fast and scalable, it's also legally greenlit. But we're only scratching the surface. CME's presentation of XRP is also a signal to other institutions. The Chicago Mercantile Exchange is a bellwether. Where it goes, Goldman Sachs, JP Morgan, Citadel, and BlackRock follow. If CME is preparing the world for XRP as a tradable, hedgeable, and collateralized asset, then those institutions are now being onboarded into the future XRP-powered financial system. Think on-chain derivatives. Think XRP-settled FX swaps. Think tokenized bonds paid and settled in XRP. The world is racing toward a financial reset, and XRP is now at the core of that new machine.